All right, so for this video, I wanted to go over the Montana State Earned Income Tax Credit. So the federal Earned Income Tax Credit is very well known, right? This is reported on your Form 1040, and it's generally available to taxpayers that are lower income and have qualifying children, or taxpayers that don't have qualifying children, but their income falls basically below the poverty line. So they have so low of earned income in the eyes of the federal government that they're eligible for the EITC even though they have no qualifying children. Now, Montana is one of about 30 states that have their own version of the Earned Income Tax Credit, and it is computed as a percentage of the federal amount. So what we want to do here is look at an example return for John Q. taxpayer and how he can compute the Montana portion or additional piece rather for his earned income tax credit. So the starting point is always get your federal return done first. And for obvious reasons, this has to be done first because the Montana return is going to compute the state EITC as a percentage of the federal, right? So logically, we need to have the federal number first in order to figure out what the state piece will be. So in this example, we have John Q. taxpayer. He's a single filer. He lives in Great Falls, Montana, and he doesn't have any qualifying children. So he has no dependents, but given his earned income is only $18,000 for the year, he qualifies for the EITC because he falls below that threshold for the no qualifying children bracket. So John does his 1040 and he completes the EITC worksheet, which results in $521 of earned income tax credit. Okay, so that is the amount of credit. If he looks up the EIC tables for the current tax year, based on the $18,000 in earned income, single filing status, no qualifying children, his federal EIC is going to be $521. Now, when he moves on to his Montana return, Montana uses the 521, so it uses that federal piece, and it takes 3% of the federal earned income credit amount. So we've got John's resident return here, right? John Q. taxpayer, single filer, and his residency status in Montana is a full year resident. Now, the amount of tax that John's going to owe based on this income for state purposes is here. So line 18 is the initial tax liability of $308 before accounting for credits. So credits are state income taxes withheld, and then other types of credits like the earned income tax credit. So very simple calculation. You don't need a separate schedule for Montana here. We just have to put the numbers on the form. But you can see here we have line 23A, earned income tax credit. Enter the federal EITC, right? There's the 521. Remember that came from page 2 of this 1040. And then the state portion is simply multiply this amount by 3%. So 521 times 3% gives us $16. So $16 is going to be the amount of Montana state earned income tax credit for Montana state tax purposes. Okay, so very, very simple calculation. You can see, Montana is a very lean return, only 2 pages, assuming you don't have anything else that needs to be added here. But, the messaging here is when you're a resident in a state that imposes an income tax, you want to be very careful to not only capture all the federal tax credits that you might be eligible for, but these additional state tax credits. And so there are a lot of overlaps where you might have a federal credit, and then there's also a reciprocal state credit that's computed based on that federal amount. And this is one such example. So, it's not a lot of money, but, every little bit helps, right? I mean, $16, it's $16 more that's in your pocket. So make sure you're capturing all the credits and deductions for your tax returns, both the federal and state level. That covers the video. I hope that was helpful. If you have any questions, please leave me a comment below, and I look forward to seeing you again on the next video. Thank you.